not been the case. So what we're going to do today is go over, as I mentioned before, some of my favorite candlestick and Western indicators. We'll talk a little bit about money management. That's not really the focus here. There's other avenues, educational resources, but we will definitely touch on money management because it's such a vital component. And one very important aspect, and the reason I'm so pleased to have you here, is I really want you to ask questions. The way you're going to get the most information out of this seminar, the way we're going to learn from each other, is ask questions. Okay, this is very interactive. The Japanese say questions are the wick in the candle of learning. We're also going to have hundreds of real-world examples. You have this handout. Okay. And we're going to go step by step. The Japanese proverb says, the fool in a hurry drinks tea with chopsticks. Okay. We're going to go over this step by step. That's why you have this voluminous handout. Okay. And the way I like to visualize this actually is the information is going to come out like gushing from a fire hydrant. Okay, this is your bucket to catch the information. So let's look at what we're going to be doing today, an overview. First, we'll be going over the construction of the candlestick charts. I had asked you how many are new to candles. I guess the question is, how many use bar charts now? How many still use bar charts? Nobody. Okay, I'm not surprised. Every time I ask that, there are fewer and fewer people because people realize the information they get with a candlestick chart can't be received any other way. And for those new to candles, I want to make sure we all understand how to draw the basic candlestick line. So we'll be going over that during the session today. We're going to look at individual candlestick lines. You'll be amazed with how much information you get with one candlestick line. You're going to see how the candles relay the imbalance between the bulls and the bears. Then we're going to progress and look at candlestick patterns, and that is more than one candlestick line. Most of the candlestick signals are made by more than one candlestick line. We're going to look at the differences between Forex and non-Forex candle signals. I get many emails asking about my resources, my DVDs and so forth, and they ask, can they be used in the Forex market? And the answer is yes. The only thing that can't be used are gaps, okay, what the Japanese call windows. However, although all the patterns can be used in the Forex market, what we're going to do today is show you how those patterns are a little bit different because the Forex market is a 24-hour market. Blueprint for Forex trading success. And what we're going to do that in this, which will be later this afternoon, is kind of bring together how to use the candlestick signals so you can apply them in real-world trading strategies. So, for example, we're going to show how to combine candlesticks with Western indicators. Now, I've talked about Western indicators before in my other seminars, but I'm going to be looking more today on what is important in the Forex market. For example, Fibonacci retracements. Very important in Forex. I don't talk about it when I do seminars for equities. So we'll look at East and West. Then we're going to be looking at intraday candles. Since so many of you are intraday traders, we're going to look at techniques that will help refine entry and exits on the intraday. Even for those who are not intraday traders, for swing traders, hold positions more than a day, I'm going to show you some really neat techniques for using intraday signals to get earlier buy or sell signals that you don't see on a daily chart. So for those who are intraday, certainly this is going to be important for you, but don't tune out if you're a swing trader. I'm going to show you some really neat things that you can apply to improve timing, entering and exiting the markets, things you may have never thought about before. Money management. Okay, this is one of the greatest misuses of candlesticks. People forget about risk-reward analysis, adapting to the market, looking at the candles in context. Again, we'll be going through all this during the seminar. Okay, trading psychology, we'll touch on this also. Okay, you can have all the tools, but if you don't have the right psychology, the tools are not going to do you any good. And that's a real challenge to many, many traders. And we're going to have what I call the candlestick screener. Okay, a lot of this stuff is brand new, including this. Okay, a a very valuable way to increase the odds of a trade working if the market's at support or resistance. By the conclusion of the seminar, let me tell you what you're going to be able to accomplish. You're going to be able to spot market turns ahead of the competition. This is what the candlesticks shine at, giving us reversal signals in 1, 2, or 3 sessions. You're also going to be able to know when to act on a candlestick signal and when to ignore a candlestick signal. Not every candlestick signal should be traded. This is a major mistake many traders make. They get so excited that they recognize a candlestick signal, that they buy or sell it. That's the easiest and best way to get burnt with the candles. You're also going to know which trades to avoid. Candlesticks excel at helping us evaluate probabilities. So we're going to look at analyzing the candlestick line or signal if the market makes a new high and low and be able to say to ourselves, well, the market broke resistance, but based on this candlestick signal, I don't think the rally is going to continue. Or if the market broke support based on this candlestick signal, I don't think the sell-off is going to continue. Knowing what not to do can be just as important as knowing what to do. And then we're going to be able to analyze, and this is something else people don't think of, and I bet many of you never thought of this. You could have a single candlestick signal, but at times you use that candlestick signal to exit a position. At other times, you should use that candlestick signal to enter a position. And there are ways to say, okay, I'm going to use the candlestick signal to initiate a new position. Other times you say, I'm only going to use this candlestick signal to exit. There's lots of material written on entering positions, very little material written on exiting. Okay, we're going to look at exit strategies today. So essentially, by the end of the seminar, you're going to be able to, as our slogan says, be able to trade smarter, trade better, trade safer. We're going to now look at the construction of the candlestick line. I know many of you are familiar with this. But without, the Japanese say, without oars you can't cross in a boat. These are your oars. If you have any questions, of course, during the seminar, feel free to interrupt and raise your hand. And especially this part, because everything we'll be doing for the rest of the session, including when we talk about Western technicals, are all going to be based on drawing the candlestick line. Very simple. The candlestick line is made of 4 data points. And the 2 data points that define the rectangular portion of the candlestick line, which is called the real body, is the open and the close. So the open and close is a relationship that forms the real body, whether the real body is black or white. A white real body means the close is higher than the open. By the way, you could use candlesticks in all time frames. I will personally look at daily, 30, and 60 minutes, but that's because I do my analysis at the end of the session, okay, for our institutional traders. For those who trade intraday, you could use 5, 10, 15-minute candles. Essentially, the time frame you should be using is dependent on your holding period. If you're going to hold an intraday trade for less than 2 hours, I would be looking at 5, 10-minute candlestick charts. If you're doing 2, 3 hours or a good portion of the day, I'd be looking at 15-minute, 30-minute, and 60-minute. But my focus, only because of the way I work, are daily candle charts, 60 and 30 minutes. And as I mentioned before, there are going to be ways, even if you trade with a daily chart, there are going to be reasons why you should be looking at 30 and 60-minute candles. We'll talk about that when we go to the intraday. You'll be able to find what we call hidden support or resistance areas that people who look at the daily charts may not be able to see. So we have a white real body because the close is higher than the open. A black real body means that the close is under the open. Now, most charting services, because of the Forex market, the opening closing, there's really no opening closing. Most charting services will use 5 p.m. Eastern time as the closing or opening. So, for example, it'll be 4:59 Eastern time, 4:59 and 59 seconds is the closing. The next trade is the opening. Okay. And it's this aspect about the Forex market that's different than the other